Hello and welcome to your weekly technical update, your guide to the charts that matter this week. I'm Andrew Gagan. Well, as we look towards 2026, let's take a look at the local share market. The S&P ASX 200 has underperformed relative to global markets, particularly over the past 2 months. Violetta Todorova from Leverage Shares analyses the technical trends she's identified.
We've seen key support level being broken on the downside, which suggests that the market is already in type of a correction territory. However, we've seen the relative strength index dropping into oversold territory, and we've seen a small rebound ensuing. So most probably we will see another leg lower in the XJO, especially after the RBA announced the interest rates on hold, and the market is wondering, are we gonna see further interest rate cuts in 2026? I'm reading some commentary. Some economists are expecting actually a hike, which I don't think it will materialize. I think my baseline scenario is potentially for another cut, say in August, and another one in November, which will support the Aussie stock market. And I think after this current correction is finished, we will resume the long-term uptrend. And I think the XJO by the end of 2026 can trade very comfortably at around 9,400 points. So the current price weakness, in my view, is presenting great buying opportunity for investors.
Well, gold has been one of the best performing assets across the year, so how's it set up for next year? Violetta Todorova looks at the technicals.
And I believe in the next couple of months, most probably that consolidation will continue to unfold without fresh catalysts for gold. And I know a lot of people are calling the top here. However, I'm not seeing signs of top formation, and purely looking at the charts, weekly, daily, and monthly charts, gold is just overbought on a short-term basis. That's why we are seeing the current consolidation, but we are seeing unwinding of the overbought momentum conditions in time rather than in price, which shows that momentum is still very strong. And I think in 2026 we are going to see a break above the previous key resistance of $4,381 per ounce, which will trigger the next wave up. My long-term upside price target remains at 4,800 points, but I think we can see gold overshooting and testing the key psychological level of 5,000. So plenty of upside for gold in 2026.
And finally, something a little different, the psychology of trading. Andy Rafsanjani from Trading Psychology looks at how past mistakes influencing present and future decisions in what she calls recency bias. She uses an example to illustrate why it weighs on traders.
If you look, for example, at this trader that I was working with last week, he had this epic FOMC trade. You can see entered at 6,860, and then the market closed in the US. He's an American guy, and then Asia was selling off like crazy. He didn't look at the market. He had the stop loss in, and then he ended what was a 60-point profit in a 10-point loss. Now, the next day, again, he nailed the entry. That's where I put the little sun. That's the US Open. And he got rattled by this little retracement where the market came down. And when he was 10 points still in profit, he's like, I take my money and run. And guess what? Trader Murphy's Law, he left 70 points on the table because after that, the market just kept going. And that is a very, very bitter experience that many traders experience, especially recently with the market moving really nicely again.
And that's it for this week's edition of The Charts to Watch. Join us for more technical talk in the new year. Happy trading.